Okay, hello team. Just wanted to make this quick video regarding to talk about potential gaps. So pretty much just to explain how gaps work and how they pretty much affect the ticker and affect the market. But obviously, just just gonna be just quick video explaining that with visual, so you can kind of so you all can see of the potential gap fill. So first, we're going to start off. What is a gap fill, right? A gap fill pretty much is whatever the exact reason. Gaps are the results of some kind of events happening while the market is closed. Meaning when the market closes at 3 p.m. Central Time, my time, that's whenever if the news, uh, ER released offering any failed FDA or any types people are expecting and then nothing happens, contracts, whatever, and it's being released, during after hours of pre-market, that action, it's what pretty much leads to gaps into market opens. Why? Because market closed at 3 p.m. So that results is the buying and selling pressure at the opening of the next day that will make the stock open at a different price than when it was closed. So it closed at 310 yesterday, and out of nowhere, after hours comes in, and then you just some news releases makes it run all the way to 5. That 3 closing at 10 will not show in the print of the daily, weekly time frame, given that potential gaps that whatever's running is not being created into the daily time frame, only into 4 hours where you can not really see the action. But you can use daily to have levels of ideas, but it just doesn't create it here, for example, on Webull. So what we're going to show you is action pre-market. I'm gonna show you here an example. I'm gonna give you an example. What is a gap fill? And we're gonna start with this one that ran pretty high. Well, this one doesn't have history, so that's already showing that if we go back, just remember Webull has it has VWAP now on after hours and pre-market. It is where it used to just have it randomly now. So okay, for sure I know how I was paying attention to this. So this is gonna be right here. It's gonna be where after hours starts. You can see 9:30. It's an hour ahead of my time. So it starts here. And this action here, what's happening throughout pre-market, it's what, it was being created a gap. So this is not a good since it doesn't have a history yet of forming a gap. So we're going to go to this one. Okay, this is a good example because this one is going to have a history. We're going to open up, like I said, this action here is pre-market. It's not being counted towards daily time frame or weekly and so on. You can only see this in 4 hours, with the levels when it's moving. So what I'm saying, whatever's happening after hours and pre-market is not being seen in the daily. Now I'm gonna show you here, if you go to daily time frame, where the price opened up. And you can also see here that this is, 21, and it's showing that it opened up at a level of 861. You open at 861, but look at this. You see this? It closed yesterday? Yesterday it closed. You go to notice it closed 475. It closed at 475 on the, let's say, Thursday, right? Because this was Friday. So on Thursday it closed at 475. And what happens on that, Friday morning? It pops. It does this. So now this action is not being shown in the daily time frame. So whatever's happening here is not going to show you until when? Until market opens. When market opens, that's whenever the print is going to start off. And you're going to notice here that if we go back to the 5 minutes, see 9:30 right here, opened 8:31, right? And it went to a high of $21 to close right here, to close into 1198. And that's just an explanation. If we go to previous days, you're going to notice that it closed pretty much into the area of fourth. No, this is a pre-market. Let me see. Yep, that was after hours. So let's go back here. This way you're gonna know that it went down and it closed at 475. That was Friday. It closed at 475. So this thing, remember I was showing you that it ran to $21? There it goes, running to $21 when it went from 871 to $21. And guess what it closed at the end of the day? 11 something, right? 11.98, where it closed at here. It closed at 12.61. You know, it's 11.98, 12.60. It was just around that area when it was trading pre-market. You saw it right here. See, it closed about 12.66, 12.68. So what I'm showing you here is this ticker. You notice in this action is not showing you what it did after hours or pre-market. It just, it's being traded. But that's the event that is happening in pre-market. Meaning that once market opens, it's going to open up wherever the price is at. So if yesterday was closing at 4, you're going to notice this huge gap, right? And remember how this one closed? I mean, it opened up at 8 something. So you're going to notice here, 861 to run $21 to come back down. It never really, continued the price. It struggled all day because of the gap fill potential. It was already sitting on gap. People were already making their money. They were, even this one give from 860 to $21. That's a 100% move. Right in pre-market. I mean, right after market opens. And this is just one example, right? It's just saying, whatever happening after hours pre-market, it goes into a gap potential. And so, given that opportunity, it's also given the potential to, run do back and forth things throughout the day to eventually what? Fade. So that's just one example. This one is not so much, but you can see that when he opened up at 861. It wasn't so high, and he was able to run to 21. There's other ones that open up so high here, and that just becomes a whole day fade. And we're going to show you another one. We go on TF. This remember we focus on the pre-market. Oh, this is a good example, beautiful example. Then I'm gonna end the video on this one because it just kind of shows the example on this one, and this is gonna be a quick gap. So remember the further it gets from the previous day closing, whatever runs after hours in pre-market, that's where you're gonna have to kind of you can ride pre-market and after hours probably, depending. Remember, if it runs too much pre-market, the same pre-market is going to fade. If it runs too much after hours, it's going to fade in pre-market or the same after hours. So what I'm saying is, you need to, be consistently saying when it's making the move and how it's making the move, how far it's making the move, so you don't catch into a push and then come back down. So this is a potential gap fill. You're going to notice here, on Thursday, it closed at 587. And guess what it does after hours in pre-market? It runs, right? Because the market opens, you go to notice that it's open, right? 987. If the previous if on Thursday it closed at 587 and it opened up on Friday at 987, there was no action here for you to show that it built up like this day by day. So that is potential gap fill. Now we're going to show you here what it did in pre-market. So your pre-market here real quick. You guys notice here, pre-market came in. This right here is market open, right here from this line and forward down. This is market open and down. So whatever happens here, pre-market, it runs right. And then look where previous date is closed. It closed into the 5 area. And where it's sitting at now, when market open again, it's sitting in the 9 area. So that is given that if I go look at the daily time frame, you're going to notice that you open up a 9 area, which is 921. It's right here. You open at 921. You see how that gap fill? You kind of open up here. You can see that you ran for the day. For the day that he was there, he ran and he went into a high 1051 to close at the end of the day into what? He closed into 696. So eventually still became a fade throughout the day. So let's go here. You're going to notice that he opened at 9 something. He opened up right here, 9 something. See 977. And then he went to a high of what? Of 1055, 1057 to do what? Completely fade into the gap. And even now, still has the gap that he has the potential to still come to where? To 571 again. Probably a wick, because look at this momentum. So, action happening throughout pre-market or after hours is not being counted throughout the daily, and that gives the potential to form a gap that leads to the fade. That that gap should come down and fill that gap. And just like this, you have us creating gaps, and eventually this created this gap, and it's gonna have to fill this again to come back again. It's just kind of the idea of that. So let's go to the next one. See how this one ran pre-market. Oh, there goes another one. There's a good example, pre-market. Pre-market action. This is what I was looking at right now. Pre-market action. Right here, look. Pre-market action, and I'm looking at the pre-market, that led to it being a fade in the day of Friday. So you're going to notice here, Thursday, this candle closed into what? 134. And you're going to notice that this thing ran after hours of pre-market. One of those two times. I haven't even checked it yet right now. But it ran throughout pre-market or after hours and went up, right? So where did this ticker open up? It opened up at 177. Where did it open last time? I mean, where did it close Thursday? It closed into 134. That's over 40 cents in gap. So if you put this ticker here at 177, the ticker still open here, right? And you're going to notice that he actually ran throughout the day. He ran at the day. He ran after market opens to run the high. You can see that he ran the high of 247 to completely fade again and come back down. Because, eventually that's what happens. Market open does a little quick pops or whatever throughout the day, it comes back down. Let's see what happens throughout the day. Oh, well, no wonder. He ran that much because he was running so much throughout pre-market. He had those range. Okay, so you can see, look, he opens up. He already ran 180. So eventually what it did, you can see that even the 480 is not even showing here, right? It's showing 264. Why is it showing 264? Because that's the print that gave you when market was open of high of 264. It's not going to give you whatsoever, not even weekly. Look, you see how weekly is not even giving you a high of 264. It's not giving you the 480. Where's 480? Look where 480 is at. You see 456, and then the higher high of 480 to come back down, fade. But I'm just saying, this is an example, right? And why is it 264 and not 480? Let's go back to the action here. Remember, market open starts here. You're going to notice things around 480 already. You're going to, market open starts probably push a little bit and then bring it back down. So you can notice you open at what? 177, the market open. It goes 177, 177. And guess where it goes? It goes to 264, right? Whoop, 264. Look at this. High right here. 252, high of 264 throughout the day. And guess what happens throughout the day as well? It fades back down to where? Back to 261. And this is still showing the potential to keep fading back down. So you see what I'm saying? 277 open, runs to 264, and fades back down to 261. Just completely fade because of the gap that it was creating. Those gaps, it has high intentions to just be fades throughout the day. I'm not saying it's going to fade right market opens, but that's the setup that it's going to do throughout the day. You're going to fight, or you're going to think that just a little comeback up, or a reverse to BWAP is going to be like, oh, look, it's coming back. No, it's not really coming back. It's usually setting up to end into a lower low throughout the day. So we go with this one here, last one. Oh, there goes another good. This one held quite a while, but you can see that it didn't do nothing. But look where it opened up. And this was after a pre-market action. After hours came, and then look, nothing pretty much. But the range was pretty nice. Let me see the range. No, it was just dollar range. And yes, I'm not saying that every single gap, every single one is gonna eventually, fall into a fade, but higher chances that it will. There's many tickets that do, and it's just such a repeatable pattern that is unavoidable. That you eventually is just going to constantly get caught up in that if you keep if you keep trying to go for fades. So what I'm saying is, an example is don't go for fades that ran so much pre-market or after hours. You want to make that money in after hours pre-market, so you don't catch the fade into market opens. So when it wants to market opens, or something that you want to catch someone that has the potential to go up, you want to make sure this goes today. You want to make sure that the ticker is coming from a build-up, from a daily build-up. This is a bad news. What's up with all these tickers that just randomly new IPOs? That's really exactly crazy news. Go to next. This is not that bad. But even then, he still kind of pushes hold strong. This is what I'm saying. You can see that even this one. Where did he opened up? He opened up in the open of 244. That's not bad. 240. No, see, look, he opened up so high just to come back down. Look at how he threw out the fade. He opened up at 244, right? And look where how he filled the gap all the way down here to 216 to rerun. Even run throughout the day 280. So whatever throughout the day he ran 280. Oh, this ticker. This is what I'm saying. They did some crazy ass movements after I was in pre-market. But you're gonna notice the 16 comes to dips, look, and it goes back to the 279, and it goes back down. Just the range. Just some of the tickers were running on crazy range. I was seeing a one for 400. It was almost for like 500% on pre-market, and then others were following that. So it was kind of crazy. Okay, this is a good example of what I mean by the build up. You see how the ticker came from here? This is the opening of pre-market. I mean, opening of a market open, right? Market open comes, you're gonna see that they is still in the same price of when of Thursday. This is Thursday. This is Friday. So Thursday still priced here, and it goes up. Let's look at daily. You see this daily? You're gonna notice that if he opens up here, and when he goes selling, 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 and then selling, and it goes up. But what I'm saying is, every time that he sells heavy, he has the potential to reverse forward for the next day, kind of idea, right? So if you had to sell it here and this thing closed here, the previous day, the potential for this one is to go up, right? To go up in the time frame. Why is it should be going up? I mean, you got a bullish time frame, but also you see how bullish the weekly time frame is. It's actually setting up for what? For a higher high. Even this week, look at this week out. This week was. It went from, what was this day? The whole week it went to a high of 2 to a low 181. And yeah, it didn't do much until what? Next week. Next week, which is this week or last week that happened, he made that move, and that is building up. So it's building that potential into a push, right? You want this. Wow. You want this little build up like this. You want this. You don't want it to where, he opens, like he's doing this, and I don't know, where pre-market after hours opens up here. Because then that becomes the fade into back down. And then, it doesn't work that way. So that's how you can eventually, avoid fades. Don't catch buildups like if we were Thursday. Let's say you come Thursday and you see this little buildup here, and eventually, you know that it's setting up. You want to catch this to start building up. You don't want to catch something that's running pre-market so high or after hours so high. But like I said, that's basic potential. What happened if he just started pushing? So you can make money pre-market, but don't stay into market opens if it's already sitting in a gap fill, meaning, if it's sitting so high from the previous day's close, because that action does not count towards toward the daily or weekly time frame or even higher. So that will be on the gap fill. Here's a little quick short video about it. Any questions, like I said, will be answered, in the other one. And then this is just so just for you to kind of show you, how you can avoid potential gaps. So just what I mean by avoiding potential gap is check your daily time frame always. If you see that this thing is sitting such in a big gap, don't even attack it. If you're going to attack it, probably attack it quick, in and out, in and out. Don't overstay. Sometimes even if your scalps can be caught up, because it's going to be probably a quick little wick just to go back down. And guess that back down means that you're going to have to either average again so you can get out in your second scalp and profit, or probably even break even. And then, re-enter again, because sometimes that's what happens when you're catching fade. When you're trying to catch fades, you're catching fake pushes, and to just what? Eventually set up into a downside. So remember what he says. He says, whatever the exact reason, gaps are the results of some kind of events happening while the market is closed at 3:30 p.m. my central time. So the result is the buying or selling pressure at the opening of the next day that will make the stock open at a different price than the one it closed the previous day. And another one would be a full gap up. Of course, the opening price is greater than yesterday's high price. So yesterday, remember, high price is 480, and next day opens up at 8:30 in the morning, and he opens up at 2 something. That gap is going to go back all the way down just to try to fill that gap all the way down. So, just always have the potential to that, and just all based on fundamentals. This is gaps are created fundamentals just based on expecting news. So remember that gaps, like I said, of course, because of underlying fundamentals, and or technical factors. For example, if the company's earnings are so much higher than expected, the company stocks may gap up the next day. That means the stock price opened a higher level than it closed the day before, hereby leaving the gap. So what I'm saying is, whatever actions happen pre-market after hours doesn't count throughout. When the market closed, and because market what every time is going to show you when it opens up at 8:30 p.m. 8:30 a.m. and when it closes at 3:30. 3:30 at 3 p.m. So whatever this is a candle, like I said, it's gonna be a candle from open to close. And if you're gonna notice the time is from 8:30 to 3 p.m. Central Time. So that's gonna be every single candle. So whatever after hours the pre-market will not show in here, and and that's how your gaps are potential created. So that'll be just a video for this gap fill, and then I'll see you guys next time.